This is Don Durrett, Gold Stock Data. I created some portfolios today I wanted to share with you. Before we go over those three portfolios, I wanted to talk a little bit about where we're at with the gold price, where I think we're going. So the HUI is at 218. Gold's been trending down. It's about 220. And the stock market has hit an all-time high. My feeling is that the stock market cannot go much higher. Maybe 5,000, maybe a little more than that, but not much. I don't think we'll get to 5,100. We might not even get to 5,000. And then I think the correction will happen. Of course, this is my best guess. But when that correction begins, I think the gold miners will go lower. And that selling, I've always used the word fierce, that the selling, when the selling does become to the stock market, it'll be fierce selling, and we'll go down from we're at 4,800 today, all the way down to sub 4,000. So that's well over 10% drop, which is a long ways down. And I don't know if that's going to happen over 2 weeks or for 8 weeks, or 12 weeks, how long it will take to get to that bottom. But when that selling begins, it'll put a lot of downward pressure on gold. Gold and silver and the miners initially should go down. That's what happens historically. And when will the miners bounce? When will gold bounce? I think that gold will bounce somewhere around 4,000 on the S&P, but that's a long ways down from 4,800. About 500 points down is 10%. So that that only takes us to 4,300. So we still got to go even further than that. So, but if we go down to 4,300, if we did around a 10% drop, you would expect the miners to drop at least 10% as well. So the HUI is currently at 218. You take 10% of that, it's about 20. You're back to 200. You're at the cycle low we just had in October. So I think we have to expect that. We have to expect basically a 10% drop in the miners sometime here in the first half of the year. And I think we could go even lower than that. I think the HUI could go to 180, 190 is kind of where my target is, which is really, really ugly. But are the miners cheap enough to buy now, or do we want to wait? We want to buy some now and then buy more later. You have to decide that. You have to decide, do I have enough of a position? Let's say, give an example, let's say Hecla, you feel like, you have a nice enough position, but your cost basis is like $5 or higher, and it's currently trading at 4. So you might want to add a little bit of Hecla here and then add a little bit more. Say if Hecla gets to 375, 350. So each stock's, different. So that's a little overview of what I'm seeing coming here in the miners, what I'm thinking about it. So now I'm going to share my desktop and go over these portfolios that I created. So this is for premium subscribers. If you're a premium subscriber, you get these search lists. And I created 3 new ones. So developers, explorers, gold stocks. I'm going to go over these fairly quickly. I'm not going to go over. So there's 22 of these, what I call top developers, explorers. I think there's only 2 or 3 exploration stocks on here. So let's look for exploration stocks. We got Free Gold Ventures and Southern Silver. So there's only 2 explorers, and the rest, we got 1 near-term producer, Ascot, and I think they actually had a news release out today. And I think their project's 85% completed. So they're going to be in production this year. The rest are development. The ones that are in blue are top picks. The ones that are in green are top 25s. So 4.3 is really the best rating you can get. So you can see there's a bunch of 4.3s on here, and there should be, since these are my favorite development plays. There's not very many A's. Most of them are B pluses. We got 2 A minuses. We got Southern Silver and Vizsla. I don't know if Vizsla really deserves A minus. It probably deserves a B plus. Southern Silver, that one might be a B plus as well. There's no A's on here, but I have them marked as A's. When I did them, I thought that they deserved it, but maybe now I have second thoughts today. I'm trying to get rid of these colors so it looks normal. 1, 2, 3. Okay, so I'll go down the list real quick. Aftermath, um, maybe I'll say a minute on each one. They have it's a long-term project. It's going to take them a while to build. This is a long-term investment, but they're currently at market cap of 35 million, and I think they have like about 200 million ounces of silver. I'm afraid they're going to sell the project. I'm not super high on it. That's why, but I think as an optionality play, it makes sense. Ascendant, this one's getting it's really crazy cheap. $9 million market cap. It looks like they have their financing. They're going to production. It's a bit of a base metals play. Ascot, I mentioned that one. They're just did financing today, and so it looks pretty solid. Barton, this is a long term. Probably not going to be much action this year. It's in Australia, but they have 2 mines to build. The second one is the most important one. First one's kind of a starter pit, but they have 2 million ounces, probably going to 3, and it's very cheap, 29 million. Like I said, not much action now. It's more of a long term. Cabral, they seem to be making some progress here, valued at 33 million. I'm not super excited about it, but because it's going to take them some time to grow production. But as long as they don't sell and they can add some resources, it's going to take time. It's another long termer. Discovery Silver is probably my favorite on this list, but it's another long termer. I think they're working on a feasibility study right now and permitting, but they have 1 billion ounces of silver, so that's the reason why it's my favorite one. But it's another long termer. Free Market Ventures, selling about $8 an ounce in the ground. They have 19 million ounces of gold. Another optionality play. I think it's really gonna work as the price of gold goes up. So these big optionality plays, they're gonna work as the price of gold goes up. Heliostar, a little bit more advanced project. They got to get. I don't know the timing on this. They're I think it's like an 80,000 ounce producer in Mexico. They got to get it built. It's going to take, I'm thinking 3 years before this thing gets into production. So long term. International Tower Hill. I've always liked this stock and watched it. So they need to get their permitting. They've been working on permitting now for 3+ years, maybe longer than that. Once they get their permits, I think this stock explodes in value. Forget how many million ounces. It's a big project in Alaska in a good location, good economics. Just a matter of time, when they get their permits and when they build it. They have some really good insiders. I don't think they're going to give this thing away. I think it's going to really move with the gold price. Maritime, they're making a lot of progress. Very cheap stock, $24 million market cap. They're going to get this thing into production fairly quickly. I don't think the capex is very high. I'm thinking like 50 million or something. We're waiting on a updated feasibility study, but Maritime looks pretty solid to me. Moneta is another big one. Forget how many million ounces, but it's a lot. I think it's around 10 million plus. It's another one we're going to have to wait on. We don't want them to sell. I'm not sure about insiders. Montage, big capex. That's what I'm worried about. The capex. I'm worried about the financing. It's jumped. I liked it a lot at 75 million, and now it's up to 100 million. So it's starting to get a little pricey at 100 million because of all the capex. The capex spending, they're going to have to do a lot of dilution. But they're talking about getting financing this year and getting permits this year. Outcrop, key to Outcrop is I've been waiting for them to give us some guidance on what they plan to do. I think they're going to take this thing to production, but they haven't told us that that's what they're going to do. But they hired the guy that's the CEO is a mining engineer, so that's kind of a clue. So let's see what they do. that one's the outcrop's a little higher risk. That's why it's a 2.5. I'm just waiting for some guidance on them if they're just going to drill and sell, or if they're thinking of taking this thing to production. Silver mines, I like this one a lot in Australia. Um, it's 130 million, but they have a lot of silver, open pit, but they have an underground mine underneath it, and they have an exploration around it. It's the only big silver mine in Australia. I just like the location. Silver Storm, 39 million. They got a mine that they got from First Majestic that they're uh, basically taking back into production. They're doing drilling now, but it's not a lot high capex. Plus, they have their San Diego mine. I like Silver Storm a lot. Silver Tiger, probably my second favorite on this list after Discovery. I just think Silver Tiger has a really solid project that's really cheap, and they have an open pit and an underground mine and a lot of exploration. And I think that Glenn, I, I think I always mispronounce his last name, Jessup or Jessam. Um, I just think he knows what he's doing. He's going to get this thing built. Skeena, I like it a lot. They have three mines basically. They're building their high grade open pit, then they got their underground, then they have their snip. My worry about Skeena is they get taken out. But boy, they have some really good projects. Southern Silver, I mean, this is an optionality play that's just ridiculously cheap. 39 million, um, like 250 million ounces of silver equivalent, probably more than that. Trading, I think, like 30 cents in the ground or something like that. It's just silly cheap optionality. As long as they don't sell before $50 silver, it should be a five bagger. We'll see. Treasury Metals is another one we're waiting on. So they still need permitting and feasibility. But wow, look at this valuation, 17 million. It's crazy. They're going to be a 100,000 ounce producer. It's just, oh, can they get permitting? Can they get financing? The risk reward looks pretty good. U.S. Gold. This one's headed for production. Looks like they're going to get their permits this year. Start construction maybe this year, maybe next year. But it's a copper gold project, but they have an exploration play in Nevada. Vizsla, it's just a fantastic property. It just keeps getting bigger and bigger, but it's up to 300 million, so it's not super cheap. But even at 300 million, I have it rated as a 10 bagger, um, because it's going to grow in size, and maybe it doesn't deserve that. 3 billion, 10 bagger would be over 3 billion, so maybe it doesn't deserve the four. But I like the property quite a bit. And then West Red Lake, um, this one really looks like a slam dunk to me. They are drilling. They have a real solid. They have, basically all they have to do is the capex is going to be really low on this one. They're putting a mine back into production that went bankrupt because they ran out of money, and they were drilling. They're basically mining the wrong area, and it had a low grade. So now they're going back and drilling it. So when they start this thing, they're going to make sure that the head grade is good enough to make money, and plus they have a second mine that they're going to be able to truck ore over to. So looks like a slam dunker. So those are my development plays. Now we're going to do silver stocks are smaller, so we can do those a little bit faster. So these are let's see how many we got, 15. So these are my 15 favorite silver plays. You can see there's a lot of greens. These are top 25s. So all these silver plays are top 25s. They're all, and then we have two that are top picks that didn't make the top 25. Silver Tiger, they should be on the top 25, though they're not there yet because a little bit of risk. I have them as moderate, but we got to get permits and we got to get some path to production. But they're really close. And then Hochschild, because of Peru, um, making sure that everything under control. But everything else is top 25. A lot of A minuses. So we got Adriatic that's just ramping up production right now in Eastern Europe. looks really, really solid. The all-in cost there is going to be, should be around $12 break even. So they're going to have some really strong free cash flow. So I like that. Avino, they just got their surface rights and the stock price didn't move, trading at 45 cents US. That to me is just crazy cheap. Avino, they have a, uh, they, after they get this, they just got the service rights. So now they're working on their permits. Once they get their permit, they'll be able to, what they want to do is they want to do an underground ramp and then mine 3 veins off of it. 1 million ounces for each one, 500 tons for each one of the veins that they want to mine. Plus, they have a tailings project that's going to add another 1 million ounces. So basically, after about 3 more years, maybe 4, they're going to add about 4 million ounces. So they're currently mining about 2. So they take it to 6 million ounces. So my worry about Vino is they get taken out. The Zagounder mine is going to expand to 8 million ounces this year. Then they got Boumadine that they think is just as big. So that could take them to 10, 12, 14 million ounces. It's, very economic, high free cash flow. It's in Morocco. They haven't any problems. Isle just looks really, really solid. Core, it's trading at 279. It was down to about 220, 210. I think it might go back down there, 225. So this is one you could kind of maybe nibble at here and buy. I think we're going to get it cheaper. So 250, 225 is kind of where you want to buy this thing. Discovery, again, I mentioned that one. That was on the development. That was my favorite development play. First Majestic, trading under $5. I think we're probably going to get this thing 425, I think is where it's going. Might even go down to $4, but I think we're going to get it cheaper. Fresneo is just super cheap, trading at $6. We might get that thing at $5.50, $5. Go Gold, trading at 88 cents. I just really like their 2 projects they're building. Hecla trading at $4. I think probably nibble here and then try to get it at 375 and 350. Hochschild, you got to look at Peru and see how it's going. I don't have a problem holding it. I'm okay with the risk. Buying it at $1, it's trading at $1.10 right now. Buying it here and under $1 just seems like a steal. Pan American trading at 370, 376 here. Anything under $14, I think, is a buy. And then if you can get it with a 12 handle, that's just fantastic because I think long term this thing's headed to maybe $100. Silver Mines trading at 10 cents. Well, $136 million. It's going to take them a couple of years to build their mine. Then Silver Tiger, I mentioned before. Silvercrest is another one I really like. I had it on Seeking Alpha as my pick of the year. If silver trends to $50, I think Silvercrest is going to blast off. So it's currently at $6. I liked it a lot at $4. So it's not super cheap. I have it as a 10 bagger, but I'd really like to buy it at $5. So it's currently at 6. So maybe if you're patient, maybe you'll get it a lot, 5.25, maybe $5, maybe. And then Silvercorp probably has the most risk of any stock on this list because of it's mine in China. So we just don't know how that's going to react. But it has a lot of leverage. I have it here as a 3, but I think it prints a lot better than that. I could click on the profile page and check it. Oh, what the heck? Let's do that. I'm going to click on the profile page and scroll down and see what it prints at. So it's currently printing as a 10 bagger, 1355. So that's kind of crazy. So I'm going to go ahead and update silver. Am I on the right one? No, I can't see it. That was Silver Corp. Traders at 10 bagger. All right. So let's go back here. So I got it. Yep. Oh, I think the reason why I have it there is because it's in Taiwan. That's the reason why I didn't. But it does print as a 10 bagger. So those are the silver miners. Now we're going to do the last one, which is the gold stocks. So if you add all these stocks together, it's about 50 names. And I think in my favorites list, I think I have more than that. And the favorites, let's check the favorites list and see what the count is. 48. So it's about the same favorites. And if you add these three together, so here's the gold stocks. There's 18 of them. So most of these are producers. We got Ascot as a near termer. We have one development story, Skeena, and Skeena is getting close to being a producer. So we got Skeena and Ascot are the only non-producers. The MPs are the mid-tiers. So they're mainly all mid-tiers. We got a couple emerging majors. So we got no big market cap. We have no majors. So we got I-80. I-80 is a mid-tier. I have it as an emerging majors. So we're going to fix that one real quick. I-80. It's hard for me to keep this database up to date. So we're going to change I-80 to a mid-tier because in order to be an emerging major, you need to be at least around 1.8 to 2 billion. So they're not there. So we change them. We got another one. Serato is an emerging mid-tier. No, because they don't produce enough. My mistake. I got to go back. It's not an emerging major. It's an emerging mid-tier. It's Monday, guys. Okay, so we go back here. All right, Argonaut. So Argonaut's really close. They just fixed their Magino mine. It's in production. I just listened to their CEO. It looks like everything is a green light there. Once they get a couple good quarters, this thing will go to the top 25. So right now it's just a top pick, but it's really close. Eris, they're misvalued right now. They're priced about half, 550 million. They're getting ready to get Marmato in production. This thing should be $1 billion company. It's currently, I think it's half. I think it's mispriced. Ascot, we talked about. Serato, they have they're mining in Argentina and their flagships in Brazil. And their flagship is a thing of beauty. It has low cost and they're valued at 45 million. And everything looks great on their flagship in Brazil. Dundee, it's only printing as a three bagger, but they have very low cost. And they just acquired they took out one of my projects that I liked in West Africa. I want to say it was Osino, but I don't think it was Osino. Who did they take out? How come my brain isn't working today? Oh goodness. Wasn't Osino. Who do I news releases? Yeah, it was Osino. My mistake. So they just took out Osino, which I like Osino a lot, and so that made Dundee more stronger, and I think they're going to keep doing acquisitions. So even though they're 2.5, I just like them so much. That's why they're Equinox. Equinox, they have high costs, but I think they're going to get them down, and it's very cheap. Fortuna, their cost, they just came out with guidance for 2024 with 1550 ASIC. That was really nasty. So that means that their margins are only like $200 an ounce. So Fortuna, they're going to clean it up a little bit, but they print as a five bagger, so I'm going to have them on the list. Galliano they just acquired their project. They had a 50-50 JV, and now they acquired all of it. So they're really cheap as a 200,000 ounce producer valued at 225 million. The reason why is the location in West Africa. And then Hummingbird, this year is their year. They have a $77 million debt payment that's due next year. So they need to have like 50 million plus in free cash flow this year. I think they can do it. And so as long as they hit the 50 million, then everything, their balance sheet gets cleaned up. This thing is going to just explode in value. I mean, it's valued at 68 million. They're going to produce 200,000 ounces. it's just, like I said, it has risk. They got to get through this year. Orezone, that's who I was confusing with Dundee. I thought maybe I couldn't, got Orezone and Osino confused. Orezone, they've been, really solid performer, free cash flow wise. So I like that one a lot. West Africa, Red Fives in Australia, um, solid free cash flow, cheap stock. Regis is another one, Australia, that their costs are a little bit higher than I think than Red Five, but I think they're okay. The three that I like are Red Five, Regis, and West Gold in Australia. And then Skeena, I mentioned them before. Torex. Torex has been beaten up. I mean, they're down to 900 million. They were used to be well over a billion. 450,000 ounce producer. It's solid ASIC. Generating free cash flow with a good balance sheet. All the stocks on here on this list, all the stocks that I've mentioned so far, I think Torex is the only one I don't own, and I probably wish that I did. I don't have it on my buy list right now. Victoria. Victoria, they have a really good mine in a good location in the Yukon, and they have a second mine they need to build, and they're not super pricey at 328 million. So, and I want to own mid-tiers in good locations. So Victoria makes the list, and then West African. This company just they keep growing, and I just think they're too cheap not to be on this list. They print as a three bagger, solid free cash flow, growing, kind of a growth story. And then West Gold, they're probably my favorite stock in Australia. Just good management team, growth story. I like the fact that they're cash focused. They have like 100 million in cash, no debt, and they want to maintain that cash focus. And they're going to find a way to grow the company. So, and then I-80 is really kind of a marginal one to be on this list because they don't produce a lot. They don't have a lot of free cash flow right now. But you can see at $500 million, the reason why is because they have three really quality properties. All three of them are delivering on exploration. I-80 at some point is going to be a big company. It's kind of ironic. I-80 was a spin out of Equinox, and their properties are really, really good. It's like, why did Equinox spin this company out? They'd still own all those properties, but it was a spin out. Okay, guys, those are the three portfolios that I created today. So that's it. See you next time.